Hello! In this video, we're going to walk through certificates of liability insurance, what they are, why they're requested, and what all those extra requirements mean. A certificate of insurance is simply a document that shows you have coverage, what types of coverage you carry, and what your limits are. It's important to know that a certificate doesn't change your policy. It just provides proof of what's already in place. When we say liability insurance, we're talking about coverage that protects you if your business is responsible for causing injury to someone else or damage to their property. So, if something goes wrong and you're held legally responsible, liability insurance helps cover those costs. For example, if you're working at a job site and accidentally damage a client's property, or someone gets injured because of your work, that's where liability coverage would come into play. You'll usually be asked for a certificate by a contractor, property owner, or client before starting work. They want to make sure your insurance is active and that you have liability coverage in place before any work begins. The certificate holder is just the person or company requesting that proof. To issue a certificate, we need their full name and address so they can be properly documented. Now, in many cases, the certificate alone isn't enough. You may also be required to include certain endorsements. These are policy changes that expand how your coverage applies to others. One of the most common is additional insured. This means the other party is added to your policy for liability protection. So, if your work causes a claim, your insurance can help protect them as well. For example, if you're a subcontractor and something you do causes damage on a job site, the general contractor may also be covered under your policy as an additional insured. You may also see additional insured with completed operations. This extends that protection even after your work is finished, in case something goes wrong later. Primary and non-contributory means your insurance pays first, and the other party's insurance doesn't have to share in the cost of a claim. A waiver of subrogation means your insurance company agrees not to go after the other party to recover money after a claim, even if they were partially responsible. Another term you might hear is per project or per location aggregate. Normally, your policy has one total limit for all jobs during the year. With a per-project aggregate, that limit applies separately to each individual job. With a per-location aggregate, that limit applies separately to each insured location. So, for example, one large claim on one project or at one location wouldn't reduce the amount of coverage available for your other jobs or locations. You may also be asked for a notice of cancellation, which means the certificate holder is set up to be notified if your policy is canceled. Just keep in mind, this only applies if your policy includes the proper endorsement. These endorsements can be added either on a blanket basis, meaning they automatically apply when required by contract, or on a scheduled basis, where each party is added individually. You may not need all these right away, but as your business grows and you start working with larger clients or contracts, these requirements become much more common. If you're ever unsure of what applies to you, your agent can help make sure your coverage lines up with your contracts and keep everything running smoothly. Thanks for watching and have a great day.